Right. Let's make this happen. Oh, thank you. Oh, you guys are so sweet. Thank you. Let me give that a little. All right. Okay, cool. So let's go straight in. Now, where was it? It was here, wasn't it? Oh, you can't see. Ah. Guys, so we're going to go over this, and then what we're going to do is we're going to solidify it again and again and again. I know you can't see it. Remember how we're going to do it tonight? We're going to do day one of the 5-day advanced boot camp, and then we are going to do the psychology. Okay, so let me share my screen. I'm going to have a sniper entries, right? From the sniper entries, we're going to go into psychology. Or do you want to do psychology first, then sniper entries? You tell me what you guys want to do. I'm happy to do however you want to do. We go sniper entries first and then the psychology. Cool. Or vice versa. Happy to do it however you want. If not, I'll just go straight for sniper entries because I'm on it. No? Okay, we'll just go for this then. Okay, perfect. And then we'll go to the psychology. Like we said last night, we're going to do one and then one, one and then one, one and then one, one and then one. You are prepped on sniper entries. Yeah, I am, but yeah, let's go. All right, let's make it happen. Hopefully it doesn't stop sharing like it usually does. Are you ready for a party? Oh, you know it would do this. You gotta love Jerry.
All right. Yeah, that sounds it's new, it's brand new by Tiesto. It's so good. It's so good. Um, okay. So one thing, okay, so welcome. First of all, thank you guys for all joining me here today for our first day of the advanced boot camp. Now, these sessions will be 20 to 30, maybe a little bit longer, depending on how far I rant into some of these things. But what we're going to do today is we're going to talk about the things, the advanced pieces of kill shot to be aware of, okay, to find better entries, how to use kill shot to the next level, how to use it. Like everybody keeps asking me for things like the secret sauce or what is this and these things. There is really no secret sauce. The secret sauce is to just follow the data and to take your kill shot trades. That's the secret sauce, is to get out of your own way and be able to take those trades. That's what's secret about it. The secret is there is no secret, but we are going to give you guys some sauce for sure to help you guys with some of these entries. Okay, so some of the things we're going to talk about this week, and then I'm going to go through some other parameters that you might like if you want to take less losses and things like that. We're going to talk about these things. We're going to talk about the pullback, how to use it, why we call it the PBJ, those types of things, and we're going to do all that stuff this week. Okay, so one thing that's super important is that we're taking notes. All this is going to be recorded, of course, because all this is then going to go to my advanced boot camp, and will be up on the profile. Okay, so today our topic is sniper entries. So I'm going to talk a little bit about, how my entries shifted. I used to take breakout strategies, and we're going to tell a little bit of story about breakouts, and how the market is essentially how the volume is in the market, and some of the things we need to avoid to help us um, get better results with kill shot. Okay, so we're gonna go over these things, and we're gonna talk about this, how we can use this to our advantage. Getting better entries and those types of things. So what I'm gonna do is I'm gonna share my screen. And yeah, I won't be answering any questions. We're going straight through this thing. I'm focusing on the topic here today, so we can get full training on what the topic is. And today's a very good example of of having better entries. So I'm going to tell you guys a little bit of a story. Okay, so a little bit of a story is I actually, I started trading this chart. I started trading this chart way back, and I don't even know if it'll go far enough back anymore. It stops right here because there's a little dinosaur. Um, so I can't go all the way back. But I started trading this thing back in 2018. Okay. I started trading this thing back in 2018, and I'll tell you, I traded. We had, I can draw you the pandemic, but back here in 2018, right, the pandemic took this thing and shot it all the way down here, and I think it landed in about kind of the 16,000 ish, and then did this, right? So as I was learning to trade in this beautiful US 30, I was really learning to trade in these moments. Anybody here who knows a little bit about what my results were? This market and taking trades in this market paid the bills. Things obviously changed once we got to this level, reversals and all these other things. And what I had to do is I had to adjust my entries. And so when I started trading in this market, I was just trading breakouts. I wasn't using stop losses. I was doing something called hedging, which is insanity, but I wasn't doing any of that stuff. I was taking breakouts. So what happened is I had to really get to a place. What happened is the market changed. Right? I went on an 18-month uptrend. Right? I went through an 18-month uptrend, took a small amount of money to a very large amount of money, and then I struggled because the market and what I was used to and how I thought and my ego and all those things got in the way. I didn't need an indicator. I didn't need an EMA. I didn't need to know charts. I didn't need anything extra. I was just naked Forex trading. And like I always say, I tell a joke, that doesn't mean I was trading with my clothes off. That meant that I was trading with no scanners. I didn't have anything on the charts to help me. I didn't have any tools. I was just trading candles and support and resistance. And that did really teach me how to understand the candles on US 30, but it was not a long-term trading strategy because there's tools and pieces that we can put together to help us. And I was trading breakouts. Now, as you guys can see, and we'll talk a little bit about breakouts, is when you have a market like this, right? Your breakouts, instead of your breakouts running like they did in 18 months uptrend when all this thing was pumping volume and coming out of a pandemic, breakouts just ran. Now you look at breakouts, right? There's a high. Look at that breakout right here. Trap to pull in more volume before it needs to go in its direction. Look at this little breakout. Breakout, trap, all the way down. Look at breakout, trap. So all these breakouts, these trades that I used to take, they used to, break out. I'm not saying a breakout doesn't run and you can't get pips at a breakout sometimes, but that strategy was getting me into a lot of bad trades where I'd take a breakout. That was a nice breakout there, but look, the actual first breakout was this wick, then right back down, right? So breakouts then turned into traps. So instead of breaking out and continuing to run 100, 200, man, we used to take breakouts and they'd run like 600, 700 pips. NFP was insane coming out of the pandemic. You would have a breakout that would run 600, 700 pips, and we would get huge portions of those things. Now, NFP wicks above and immediately rejects, right? To catch all those people, to pull the volume into the market. Realize that through that growth and all those things that are happening, they couldn't really control it because so much volume was returning to the market, is that these breakouts then became traps. So what I tell you when I mean sniper entries, and I'll show you, there were some entries here in Killshot that were not good. Kill shot gave you a wonderful signal here on the way down, had all the ticks, 5 ticks, all the things, was still on trend, and it would have been a loss. I mean, maybe you might have got jammed in it here, maybe, or maybe. But what happened is I started to realize that my entries at some of these levels, right, even without kill shot, were just not good entries. If we take kill shot off here, let's say we didn't see an arrow, right? If we didn't see an arrow, would right in here, right? That's where our arrow was, right? Right? Our arrow is right here. With all this beside it, if we take, I don't want to update here. Get out of here. Update there. Okay. So if with this be, right, knowing what we see here, right? This here, and this here, and then the signal coming, if yes, we're on kill shot, say we didn't see kill shot and there was no signal, would we enter this market right here? Right? When the market's literally sitting right at that. Would that be the best opportunity for us to enter the market when we had those risk reward levels? Would not be the best. And so what happened to me, and that would literally have been a breakout, right? This would have been, got back to this level, broke out, you would have entered here, bam, to your loss. So what happened for me, and I used kill shot to this to help me with that, is that I really needed to shift my entries, especially if I was using a smaller stop loss, right? Because if I'm using a small stop loss here, right? If I'm using a small stop loss here, even just a little pullback back below at a 25 to 50 pip stop loss, which is something we do on kill shot and US 30, even just a little bit of a pullback is going to take me out. And that was just breaking support or breaking this resistance level. And when it breaks the resistance level, it does need to pull back, whether that pullback's going to be 20, 30, 50 pips, or it's only going to be 10 and continue on. We don't really know. But entering in that position, right? We can go to replay mode so we can see what that position looked like, right? Say we're entering right here, right? Bouncing around at that level. Like if you're looking at it, look at all this rejection level there, rejection level there, rejection level there. Would that be considered? You can see, of course, this big old juicy target up here that's like, oh yeah, that's the one, I got to get into it, right? Would this at this entry be the best? Would this be an opportunity that gave you, you're sitting right at that market. So for me, this would have been a smaller breakout. Now we did have this big high up here, but what happens is when you start to identify these things, right? When we're looking left and seeing what the market has done previously, right? We're going to find better entries. We're going to use kill shot to our advantage, but we're going to find better entries. Right? Because without kill shot on here, would we have entered that? Probably not. We probably would have been like, oh man, I much would have rather been in here, down here somewhere. Maybe I'm at the end of it. Right? But then kill shot prints to tell you, hey, there's a pretty good chance here, right? There's a pretty good chance here that this wants to keep going up. Right? That's what that signal means. Right? That signal means that potentially we want to head back up. Right? That say, okay, well, the trend is starting to shift. We don't want to push back up. There should be some pips in it, right? All those things. But if we're using one of these super tight stop losses, right? 25 pips when we have a star here and a rejection level and another level that it just broke through, that it's going to, even if it does break through here, it still needs to pull in more volume to have that continuation, right? So what we want to do when we talk about sniper entries, and we talked about this a little bit in the previous boot camp, is that we want to make sure there is space. And if there isn't space, we need to adjust our parameters, right? Even just to this level, there is literally no space. Even to the top of this level, there's 25, I guess there's 25 pips, maybe 30 pips to the top of that level. But more than likely, this chart, which it likes to repeat itself, right? Remember that when you see, and you do look left, and you see these previous rejection levels or support and resistance zones and those things, the chart was going to want to replay that. Even if it does want to continue up, even if in your mind you're like, hey, this does want to go back to the top, which at looking at this point and that signal, I'm like, I probably tend to agree that this has got a pretty good shot of coming all the way back to the top. But at this level, it's got to pull back first. Now, if we have small parameters in a trade, knowing that at this space, it's pretty likely to have a pullback. You also have a red star right on that triangle. Would this be a solid entry? No, it would not, because I don't actually have any target back to it. Maybe if I was, I had 100 pip stop loss back down here, even that's a bit aggressive because it doesn't even get back to that previous support. So what we need to do is we want to look to snipe that entry. Now, a signal could come, like if this signal had come down here and broke this 238, now we have 40, 50 pips back to that rejection level, and it's a different level because if you get into it here, now you have pips to protect yourself, right? Now a smaller stop loss would make sense a little bit. Obviously that 238's in the way, or even at the break of that 238, a smaller stop loss would get you back behind these EMAs, and you would still have some room. But you would have had to have waited for this triangle. So when this triangle comes, I'm going to leave replay here. Let me do that again. There. Okay. So now if I'm looking at that and I'm like, okay, this thing's probably going to want to pull back in here. Did pull back, touch that 238 again, and did push away. And if we did get into that signal, there was still pips on the board, right? You can see that thing still got the 25, and you had the opportunity to get like 9 or 10 out of it, right? And I did take that trade, and I got about 25, 30 out of it because I got into it just on this little bit of a pullback here. But when I started to see entries like this, and I started to see entries at these support and resistance levels, I waited them out. So this is how you find your sniper entry, right? You just wait this out. Right? If this is at one of those places, and maybe it goes and breaks, and you're like, oh man, maybe I missed out. But if you can see these sniper entries just shifting your entry, and through that journey of getting out of taking those breakouts and getting into that trade up to the breakout, right? Like getting your trade, if it does want to break out here, getting into this trade here, right, changes that position a lot. Right? Changes this position a lot. It gets actually a 30, almost a 40 pip TP if you wanted to. It got you 30 pips, right? And that's just the difference of entering it here, where coming back down to this almost wakes you out at 25, or entering it here, right? Just on a pullback, right? This is the sniper entry difference. The difference between having a sniper entry, okay, having a sniper entry or just entering. And yes, you can take these things and you can have certain parameters and all those things, and Killshot will pay. But if you're patient with these entries, another prime example, this was a 5-tick signal, right? Go through our previous boot camp, go through the basic stuff. When you get here, this was a 5-tick signal. Trend was down, 15 was down, POC was behind you, 238 was behind you. This was a 5-tick signal. But what is right here? What's this? What's that? What's this level? Is this sniper entry going to give you what you're looking for? Is this sniper entry? Is this a sniper entry? Knowing that you can see that there's a rejection level right there, is this a good entry? No, it's not. Because even back to the target, 20 pips is fine. That's still an okay result, right? But you are not giving yourself the best opportunity. These are when you kind of go through those A+ setups, those B setups, or those C setups. These are fully C setups. While you had the 5 ticks, it changes what your targets are, right? If you had taken that, it would have got to about 15 pips, then reversed, took you out, and then came back down here to your entry again, right? So one thing we want to talk about with sniper entries. Sniper entries are super, super important. And we talked about this in the first one. That's kind of that's what these support and resistance levels are for. These support and resistance levels are to tell you where your signal wants to go. And if you have one of these too close, right? Look at this one. Look at this line right here. Looking left. Look at that line. It's literally on the candle with no reward. Now you could see that there, oh, maybe there's a bunch of reward up here. But if it does want to go back up here, it's probably going to have to come back down first off this level, right? Which it slowed right down at, pushed away, and then came back down and broke through it. So if we don't have that, if we don't have the reward we're looking for, there is no sniper entry. And you're okay to take these, right? The rules would still play. If you took this thing and jammed it at 5, 10 pips, it was there. If you took this thing, jammed it at 5, 10, 20 pips, it was there. But if that's not how you're trading, if you're looking to try and get those TPs, you're looking trying to get 20, 30, maybe 50 pips out of your trades, these entries are traps. So you have to make sure you're looking left, right? And if you look left right here, that signal comes right on that. And then you can see there's another one here, like 17 pips away. 17 pips away. Does that look like a good place to enter? And if you could, once you want to do is you want to actually, start to train yourself to see previous zones. Because there's quite the zone sitting right there, right? Look at that zone that played, right? All night from Sunday, all of it. Look at that zone. That is not a sniper entry. A sniper waits for this chart. It gets its green light. Now I'm gonna get a little bit, sniper-esque, right? This triangle is your green light. It's like, okay, it's your green light. And if you're a sniper, you're like, okay, you've given the go-ahead to take the shot. You're like, okay, I'm ready to take that shot. I'm ready to take that shot now, green light. Now you're waiting for your shot to be in the right position. So that one shot, bang, you take what you need out of the market. Right? This is your go-ahead. And at this time, this was counter trend as well. Right? This is your go-ahead. And you're like, okay, am I in position to take this shot? And right here, you're not because of this rejection level. Even pushes all the way back up here and breaks above and then pulls back again. And that's when you get this signal. And same with this one. You're like, okay, green light. It's a go ahead. This one's an extra green light. Engage, right? You have all your check marks. Check, 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 check. And then you look at this chart and you go, huh, is there enough room there? Is this actually going to be a trade I want? Is this, you could obviously look down here at a potential target way down, but you know that it's got to break this first. Right? For anybody who's in, advanced, I got 20 pips back to the bottom. I better jam this thing. And if you did do that, right? If you did do that, okay, then you got 5, 10 pips out of this, protecting against this level. Okay, so this, you didn't even have to go left. You didn't even have to look left because on this replay, you're literally it's right on the resistance level on the replay, right? Like your signal comes, it's pulling back as your signal comes, and it's right here, right there. You don't even have to look left. This is like this being here is like, no, I'm okay. No, I'm good. So if you can remove these types of trades, your win rate and your outcomes are going to get much, much better. It's inevitable. So your sniper entry, and I'm going to give you guys a couple of things to go and back test and go and look and say, hey, go do your back test. This is how you want to get super advanced with this and you want to take it to the next level. Go do your back test. Then go look at your losses. When you do your back test, go look at your losses and see if that was a sniper entry. Go look at them. And I guarantee 1, 2, maybe you had 3, 4 losses. 3 of them will have this. Right? So things you want to pay attention to, okay? When we talk about sniper entries. Okay? Okay, things you want to talk about when you talk about sniper entries. Do I have my full reward available. Okay, in either of these is your full reward available. These are those advanced questions where you're like, okay, I really like this signal. And when you start getting comfortable with this, you're going to know the signal's coming. You're going to see these EMAs start getting close, which we'll talk about in a sec. And then you're going to ask that question. Is my full reward available? Here on the board. Okay, here's how you're going to save yourself if not. Okay, if the answer is yes, that's your green light. Take your shot, go for it, let that trade move. Okay, if the answer is yes, take that shot. If the answer is no, we protect ASAP. Everybody remembers what that means? Oh, what? Oh, there it is. It's there. Thought it was gone. Okay. If we got into this thing, right? We got into this thing, we're like, oh man, right? My 30 pip TP a minimum, or I'm shooting for 50s way down here. If it gets back to this level, I need to protect it in case this is just going to be a bounce and it wants to switch and reverse levels on me. Okay, so what we would do is we would come, this chart would start to push back in our direction, one more candle. We need to protect it. That's when we take our stop loss. We would have taken our stop loss and put it in here to protect it. And we would have got wicked out. Maybe we got 1 or 2 pips, but we're out of this trade that wasn't a sniper entry. It wasn't a full. It wasn't like I got 5 ticks and I got plenty of room. I don't need to close this thing. I can hold this. But you didn't have that. The answer is no. My full reward is not available. Not even 30 pips. If I can't get 30 pips out of a trade back to this, I'm going to protect it. I'm going to take what the market gives me because I'm taking too much risk. I've taken too many where it's gone 21 pips and gone. Reverses on me. Right?
Jake Graham.
So this signal, while it had all the ticks, it had this level in the way. So for your sniper entries, we can show a sniper entry, right? Like this one, this signal was actually really good. It was in the middle of open, which is not the best to show you on the kill shot strategy, but this had plenty, right? The next candle essentially would give you your TP, right? Well, guess not. You'd protect against it though. But this one had 25. Even if you kept your stop loss where it's supposed to be, back below this had full TP all over it. Would have pulled back on you, but it had full TP, right? And maybe you would have held out on this one as well because it's right next to where those candles are. It was in the middle of open, so it would have been a little bit different. But if you were patient, you're like, hey, I don't like this. And you waited for that pullback. You're above it now. It's wicked below, you're above it. Bang. Okay? So we have to ask ourselves, if the answer is no, and this is what I'm going to teach you guys through this. Of course, you guys get the 5 tick signals, right? Those are questions I learned to ask myself before I'd ever enter a position. I took my time to start to ask myself those questions. And I went back and tested them. That's why you have the POC. That's why you have the 238. That's why you have those things in those check marks, because I went back and started to ask myself those questions to make sure, because the data told me to. You want to go and you have a strong week and you're like, okay, I traded pretty good, but let's go take a look at my losses. Promise you, when you look at your losses, you're going to be trying to get something out of the market that wasn't there. That's what this truly is that when you see those targets, you're asking the market to give you something that isn't there. You're asking, and when you guys hear me say it, if you guys are ever on any of my open calls, you hear me say it. I'm asking too much of this market. If I'm asking too much of this market, I'm not getting in the trade. I'm asking too much of this signal. I'm asking this signal to engulf this candle, to break this support, to bounce through this support. I'm asking too much of it. I don't want this position. Maybe you wait. Maybe you get into a rejection up here and a pullback, which we'll go over PB and J's here. If it's tomorrow or the day after, but you're asking too much. If you ask something of the market and the market's like, nope, then you better protect that trade because it's not the best position. It's not an A setup. It may be in the B because you got all your ticks here, but it's not an A setup. So if that answer is no, if the market says no to you, then you must protect it. And you would have, you could have got 3, 4 pips. Maybe it was a break even. Maybe it got down here and you jammed it a little more and you got 10, right? Knowing that this is just sitting on a bounce level. Because if you didn't do that, this is a full loss, right? And this is, you have to get really patient with how your entries are on these charts. And I'm going to show you something a little bit later this week on the last day of boot camp. I'm going to show you something where you don't have to be as patient. But with a 25 pip stop loss, you better be patient. Because this chart can move 25 pips in one candle. So if you're using a 25 pip stop loss, you better be patient for that entry. Because one candle could take you out. And so this is a super important to ask yourself about sniper entries. Is my full reward available? And if the answer is no, you jam that trade because it's more than likely going to be a loss. Just because it's just going to want to reverse. And it did. It reversed. Would have taken you out. Would have came back down to entry and a little bit of profit. Right? Same with this one. Red candle in that same rejection level. You waited the pullback, got back to this 238, bounced a couple times, sniped. Right? You can see it literally drops right back into that zone again. Right where it's rejected a bunch of times. So would we want to be on that signal? Oh, no, of course, it doesn't have all your ticks. And it would have been a little bit counter at the time, right? But you're like, okay, pulls back. Even if you waited the second time to come to the zone, bam, pips. Waited. Look at how the entry changes, right? Say you got into it here, right? Right in that rejection level. Let's just say we're looking for 30 pips even, which is the top of this, right? 25. Let's make it 50 just to make it the 1 to 2 like it's supposed to. But look at the shift, right? You get in here, it comes back down, it wicks you out. You get this red candle, you know it's in that bounce level, you wait for it to come back out of this bounce level, and you wait into this entry, and it doesn't ever get anywhere near your stop. Now it's pulled in the volume. You're not getting in right at that rejection level. You could have protected here and took 5 or 10 potentially, or it could run up to really easy, up to a 30 pip TP, etc. Here. This is the slight shift. So when you start to see those things, you start to see those entries a little bit off. Maybe the signal isn't exactly what you're looking for, but don't forget these signals. I'm going to tell you, you better always stay on these signals. Your sniper entries are always in the direction of the signal. Always. Never against it. You start trading against these signals, you're going to lose a lot, especially with a small stop loss. Okay? So, super important, right, to just shift that entry. And I realized that if I wanted to have my lot size up and I wanted to have a 1% risk at 25 pips, I needed to be just a little bit more patient with where I was getting into the market. And getting that sniper entry with that, giving myself enough space to get to that sniper entry changed everything. Okay? So that is your first training on sniper entries. Let me see what tomorrow is. What's tomorrow? Oh, we're going right to the PB and J. So tomorrow is the PB and J. So we'll go right to pullbacks and how you can use pullbacks to your advantage. Okay, so that's just the shift in entry, and you can go back and test your losses and be like, I got in here. Would I have been better getting in here? right? So you can test that adjustment to know that you had a good entry and you knew it was going the right direction. You just got into it at the wrong spot. And that's for me, I say that to myself all the time when I'm trading. Did I get into this in the right spot? Did I get into this in the right spot? And so, super, super important to make sure that you're getting in at the right spot so you get that sniper entry. Okay? So, we will see you guys tomorrow, same time for the PB and J, the pullback and jam. And that's a secondary entry off the signals, which you can see some of them are available here, but we'll show you the secondary entries as well so that you can find entries when maybe you don't want to have to sit around and wait for signals all day. Okay? Everybody have a wonderful, wonderful day, and we will see you tomorrow. Don't forget, we also have an open call first thing in the morning, but we'll also see you tomorrow, same time, for our boot camp.
All right. I want to go over something really quickly with you guys. So basically, just given what he was saying, I'm just gonna go over here. And what he's saying, like, makes so much sense, okay? So let's go back to our session today, right? We was in a good position before when we had the session this afternoon, right? This evening, should I say. Let me just see what you just put inside the chat. Really, I was thinking about this today and looking at more entries with the arrows and seeing a couple that didn't quite change direction. Yeah, exactly. This is a good thing, right? So, when we're on session, right, and we're waiting for them entries, like I always say, we need to wait for, you see now, US 30 is slightly different to how gold behaves. US 30 is an indice. Gold is not, right? Gold is a commodity. They act slightly different, okay? That is why, yeah, exactly. And that is personally why I focus on one pair that I trade, okay? But it still kind of works the same way anyway, right? Now, when we came on session before, let me just have a look where we took some of them entries before on the call. So let's say, for example, we got in at, we were looking at around 5044, weren't we? From 5048, 5048, which was, oh, down here. So I'm looking up, right? Which was, let's have a look. Present online. It was around about here, yeah? So this was when we came onto the call this evening. Yeah, around, was around, what time was it? About 6:30. Was it 6:30 that we joined the call, weren't it? So around about here. So like my little picture, I'm going to draw a nice little love heart there. Well, that was a bit pants, but anyway, it doesn't really matter. Okay. The point is, yeah. I need to change that to white, all right, and make it a little bit thicker. But anyway, this is my point, yeah. I need to delete that. That just looks horrible. But anyway, here's my point. So this is where we kind of started the session. Now, it looks like a rabbit with ears. It's a monstrosity, right? But it doesn't matter. Okay, you get the gist as to where we were on the session, okay, and what we was looking at on the session, okay. Now we could have end. I've got to delete that. It's gonna bug me. Why is it not letting me delete? Where's the delete thing? Oh, it's there. Oh shoot. That would just annoy me. right? Okay, we don't need it. Yeah, so this is this candle, right? So this candle, we started the session. Now, we could have got into a trade here, but what would have happened? Okay, we would have probably, because yeah, we was right here when we started the session, around about here anyway. Okay, now if we had a got in, we was looking at sells. We were taking sells. If we had a got in here, we would have gone into drawdown. Now, this is the reason why we say it's really important, or on the sessions that we're on, that we need to wait for the breakout. We need to wait for the breakout. So it got to around about here before we got in to the session, because it came down slightly, it bounced off of here, and then we got in here. Okay, we took the break, we took pips. We waited, we took the break, and we brought the trade down. Okay, and then it came down to our final position here. And at this point, didn't the arrow come up on the 1 minute? What are we on here? We're on the 3 minute. Let's have a look on the one. The arrow came up here, but this was before. Yeah, no, you're right. Yeah, the arrow came. But this was after the call started. So we got on the call on the 1 minute at past. This was where we were at. So at that point, we was consolidating in this zone, right? And we were waiting for the break of this to this. Remember, it was hovering in this zone right here. Okay? Look, we got the buy signal there, right? But that would have been the most silliest of moves, because look, the 238 was above us, right? That's why we needed a break at the time. Obviously, the 238 was over here, yeah? But we needed that break. Now, it would have had to have broke through that 238 in order for us to take that trade to the upside, but it wasn't. It was more so going down, because look at the structure, okay? Yeah, you had a little breakout here, slightly, but look what he was talking about. This area. Why did we need to break this area? Look, 1, 2, 3. Remember, I said this was an interesting zone. I was saying it on the call. Look, 1, 2, 3, 4, 5, 6, 7, 8. Kept coming up, rejecting, up, rejecting. It broke out a little bit, but then it rejected up here. Okay? Now, this is why we trade the way that we trade on the sessions, like he was saying. Look back. Look, 1 here. Okay? And I'm guarantee you, if you went back even further, there'll be some, but we're not going to keep going back that far. We don't need to, right? My point is, look, this is where the fun and games started, in this zone. So that's why it's important to know what is behind us, okay? It's always going to be behind us. Look back. If you was in a dark alley and someone was behind you, would you look back? Or would you just run, right? My point is, okay? So this was an interesting area, hence why we needed to wait for the break. Now, we didn't wait for it to just start coming down. No, we needed to wait for it to break out of this zone, because look at how busy this zone was. It kept coming up, it pulled back, it kept coming up, it pulled back. But you see, it broke out here, right? But where was the most interesting area? This one, this level right here. See, this level. Why did you do that? This level right here. You see? Because look, 1, 2, 3. See? Do you see what I'm seeing? Let me know in the chat if you can see what I'm seeing. Look. Why? 1, 2, 3, 4. You see? So it needed to break out of this zone. This is what you call a zone. Okay? This is what you call a zone. And when you see a zone like this, yeah, exactly, it kept bouncing, kept coming down, bouncing up, broke out. That was your indication there. It wanted to break out, of course. Look, right? But when you can identify zones like this, then you need to wait. That's why I didn't say, guys, let's take a, look, let's take a sell right here. If we had took a sell right here, we would have been screwed, right? Because we would have gone into drawdown. And then we're thinking, oh my God, there's a buy signal. Oh, shoot, we need to get out, right? So when you can identify areas like this, zones like this, okay? And all it takes, guys, is for you to look back. Just look back and see. You can see it came through multiple times, right? So that is why on the session, we needed to wait for the break, okay? Then we got in, okay? We took a trade. We pulled our stop down immediately. That is why we always protect our trades, because we pull down our stop. Now look, this is a sell signal. It's on a red candle. It's a sell signal. The EMA is crossed. We're under the 238, okay? Everything was looking good for the sell. At the time, the volume was good, right? That was our good indication of a sell. We still needed it to break, okay? So we took a trade. We let it break. We took the trade. We got out. We let it pull back because what do? We know it's going to bounce off of these zones. But we know that market wants to come down. But guess what? It's coming back to get some volume to try and take people out that have got small accounts. Because the market knows. There's people here that took that sell. They've set themselves a little stop, whatever, right? They haven't got the money to take the little drawdown there, right? Whatever it may be. So that's why when we take our trades on the sessions, we come in, we pull our stop, we let the market go, right? We let it pull back. We do the same thing again. We get in, we pull our stop, we let it pull back. We get in, we pull our stop, we let it pull back. And then we knew on the call, okay, that it was going to break, right? Then it broke down. It kept breaking through, kept breaking through. We took the trade. And then eventually all the way down, okay? Once it broke out of this zone, we knew market was going to come down. But remember, it pulls back. It has to pull back always. So it's best to go in and go, okay, cool. We're going to take this little sell down. We're going to take this position down, right? We're going to take as many pips as we can coming down. Let it pull back. Boom. Okay, cool. Let it break out again. Take it down. Cool. Pull our stop. We take the trade, right? Rather than just being in it one time, okay, taking the trade, letting it pull back, hoping it's going to come back down, right? Let it pull back, hoping it's going to come back down. No, we took 1, 2, 3. You see, because we are taking maximum profit from our trades when we are trading this strategy. Okay? So therefore, we got in how many times? We didn't just wait one time. We got more entries. Therefore, more profit. Remember that. Okay? When you're pulling down your stop, you are always going to protect yourself in the trade. And then finally, it came through, it broke, and then we took it to, what was the first position? 21. We came through it here, 21, which was what? Here, okay? That was the first zone, which was this level here, okay? Then the next one came all the way down to 10. That is how we got maximum entries on our trades and maximum profit, rather than someone just being in it, coming through, panicking, thinking, I need to get out of this. It's going back up. It's put me in drawdown now. I don't know what to do. Boom, boom, boom. We're not in the trade taking the drawdown. No, we're already done and dusted. We're already in and out. We're done. And we get back in. We go back in. We're in and out. Boom. We're done. We get back in. Boom. You see? So you see, when you trade that way and you're protecting your funds every single time, you're not going to fall short of stop losses. You see? That is how you guarantee yourself a winning position. Don't get into trades thinking, oh, I'm just going to, hope it's going to come down to the area and I'm not going to stick a stop loss in. I'm going to go maximum drawdown, right? That's how we do it. How do we determine when to re-enter? When it breaks. Look, we needed it to break. Remember, look at this. Look back. Look back. Always. We needed it. We got into our first position, right? We broke this. We took money. We then needed it to break this. We got in again. It broke this. We got in again. We took money, right? We then needed it to break this. We got in again. We took money. Then I knew it was coming down because I already had it marked out on here. I knew it was coming back down to this zone. Why did I know that it was going to come down to this zone? Right? How did I know market was going to come down to this zone? I'll tell you. Because I look to the left. I knew it was going to come and break this zone. Why? Size of the wicks. Look. Remember I told you this last night on the call. I pre-warned you about this last night on the call. I literally said it, guys. There's massive contracts down here. Massive contracts down here. Right? That the market wants to come back and get. And we took that tonight on the session. My last TP was 10. 5010, because I knew it was coming back. Why? Look when it was here before. Look when it was here before. This was the one I showed you last night. Smack bang on 5010. Look. And I literally showed you this last night. This was the one. This was the one I was waiting for last night. Look. Look at that. See it? See it right here? Boom. That. This was the one I showed you last night. That is why that was my position. And then, remember, I said there's a potential it could go down to the next one, right? This was the one I showed you. There is contracts here in that wick, right? Remember, when a wick is going up that much, it comes all the way down, boom. That could have been, I don't know if that was a new, that actually could have been a news wick, right? Regardless, that is contracts. They pile, they slam, boom, 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 all the way through that, right? And that is what you see is money. That they want that back. They're coming for it. Remember, they're always going to come back. And this was the very one I'm sure I know I showed you last night, actually. So there you go, right? Now, and that's what we basically took. So look, let me show you. February the 20th. Just because it was back in February and we're in March, don't think for 1 second it's not going to come back and take what it wants. You see? Don't think for 1 second it won't come back and take what it wants to take. Okay? Now, remember, there's only so far it will go back down. Only so far. Only so far. But look, there's still potential. But then it will come back and take so much, and then it will go back up, take so much, because guess what? It now wants to trap. Trap and trade. Trap and trade, guys, is what they do. They trap and they trade. Okay? So when you know what the market's doing, well, I do this in such a difficult way, man. Right? When you know what market's doing, why don't I just do this? Stupid. Simple button. Right? When you know what the market's doing, you know how to defeat it. Unfilled contracts, always. Right? It's like if you let someone, you know, £10,000 and they said they were going to give it you back on the 13th of what date is it? The 13th of March. You think you're going to go back and ask for it? You think you're going to come back and take it? Of course you are. Exactly. You're going to come back and you're going to take your money. You're not going to let someone get away with 10,000. You're not going to let someone get away in their case with you know, 10 million or a billion. No. You're coming back for your money. Let me tell you, you are coming back for your money. And you're going to take it with a vengeance. You're going to call the boys. You're going to get the reinforcements in, right? You are going to get the reinforcements in, let me tell you. Right? So that is how you know where market is looking to come, because it's going to give you so many clues. It's going to give you multiple clues, right? It's going to give you multiple clues because of the zone. The zone. You see? The zone. Why is there 3 on here, by the way? I only put 2 lines on. Or did I do? Oh, I don't care. Don't worry about it. Right? So it's going to give you clues as to what it's going to do. The more times it retests an area, Oh, right. Yeah, we're on the 15-minute. The more times it retests an area, that's why. The more times, guys, it retests an area, the more times you know this is um this is something special. Something special is going to come out of this. Look at it like something special is going to come out of this and exactly what it did. Patterns are good to know. Yeah, of course. Of course. 100%. And once you know that, when you get your chart out and you look, remember, if you're on the 1 minute, you're going to look at, you want to be looking at the 5, the 15. You want to look at these time frames, okay? The 15-minute is good to look at. Looking at the higher time frames is always going to help you. Yeah, always. Because it's going to tell you what you need to see. Now, I saw that because I looked on the 15-minute time frame. That's it. When you look at that, you know where market is going to go. And then when you look at the market, it's not, you're not looking at it like, geez, man, I got to try and, decipher this. Like, do you know what I mean? Like, you haven't got to try and decipher it. Like you're looking at something foreign. I don't know. I don't even know how to explain it. All you've got to do is simply look. Okay? That's it. So, does that make sense on what I've just shared? Yeah. Does that make sense on what I've just shared from what Jay has also said? No, I mean, look, the way that I do it is basically the way that you see it like every day, okay? But like I said, you're looking at areas. You're looking at look at it like where it's built up. Yeah? Look at a new housing development where it's all built up, right? It's like that. Okay? So, I mean, for me, I like to mark out areas because I know market's going to come back. Now, I ain't going to look at the 1 minute, the 2 minute, the 3 minute. I'm not interested in that. I'm looking at the higher time frames. When market busts through a higher time frame, I know that market's coming down. When I see a 4 hour, yeah, I know that we're going down. So, um, okay, perfect, 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 perfect. Thank you so much, guys. Light bulb moment. Easier to understand. Yeah, yeah, yeah. Perfect. Mark your charts. Yeah, just know your zones. And remember, know that it has to break. So if we're taking trades, all you've got to do is secure your trade, let it pull back, get back in, let it pull back, get back in, let it pull back, get back in. Now, we knew, like on the session, as we was on the session, that it was going to drop. It was giving so many like clues. Now, when you're looking at your MetaTrader 5 and you can see it's like this on your MetaTrader. I'm trying to do it like, but you can't. I can't move the candles. Yeah, when it's like that, you know it's coming down. It gives too many clues. You know when it's going to push up. It gives too many clues. Look at the candles, look at how they move. But you know what I mean, right? When you're in the trade. Yeah? It just gives too many clues. And from this moment on, I knew it was going to pull back. And that's why I said that was why that was my final TP. Okay? So I hope that helps, right? Now, POC. Oh yeah, it was flirting with a POC as well, weren't it? Yeah, because of the POC. Because it kept flirting with the POC, right? Look at its behavior. Look at the behavior of it. And then you'll start to understand. Okay? Yeah. Well, I mean, yeah, there's no point trying it with BTC. Like you'd probably fall asleep during trade or something. But yeah, definitely. Um, now let's yeah, you'll definitely fall asleep during it. Right, let's go and do the psychology now, guys. Are you happy to do that now? Because I know I did take a bit of a long time to explain that. Yeah, cool. Oh, okay, my lovely. Um, let's go. This one is funny. Just go back already. Right. Where's the advanced kill shot training? I'll show you. Right here. Right there. Money's greatest power. Oh, okay, no worries. No worries at all. Okay, let's do this. Money's greatest power, right? Let's go. Good night, guys. I have to be up at 4. Thank you. Wow. Okay. I'm so glad that I don't, but you can't wait to quit that job. All right, let's make this happen. Don't worry, it's been recorded anyway.
Man, some of these mixes I find are just bangers. Okay, everybody, put into the chat that you guys can hear me okay. Today, you know, as we go through this boot camp, as we go through this psychology boot camp, we will be, don't be any charts, there won't be anything. Essentially, hopefully you guys have your pen and paper out. There's going to be lots of note taking. We're going to talk about some very specific things as it pertains to trading and money and our psychology. Okay, so I won't be answering questions in the chat either, because this is going to be boot camp stuff. This is going to be training stuff. So what I'm going to do is I'm going to kind of roll right into it. It'll be about 20-30 minutes where we talk about certain things in psychology that helps us with trading. Okay, things that might get in the way, things that we need to understand, all those things. Okay, so our first A is money's greatest power. Now, let's talk a little bit about the emotional connection to money, right? And how most people were brought up a certain way on how money made us feel, right? How our parents earned it, how our parents used it, right? So when we talk about our emotional connection, an emotional connection to money, it's usually because we were taught a certain way about money. Most kids, and I know that I wasn't. I didn't understand credit. I didn't understand how to use money to my advantage. I didn't learn any of that until really I found trading later in my life. Right? So let's understand why we're emotionally connected to money and why most people are emotionally connected to money, right? Because we were taught a certain way to earn money. Now we can talk about, the workforce and getting a job and how most people, the majority of the world, 90% of the world, that's how you earn money. right? That's how you earn income. That's how you make money to pay the bills, right? Is you go to work and you give up your time for it, right? So something that's super important here, and why it becomes very hard to trade in the beginning, right? We're going to talk about fear and greed more specifically in a couple of the calls, but when it comes to money, right, we have this emotional attachment to it because we had to give up so much to get it, right? We had to give up so much to get money. Most people, you work 50, 60 hours a week and overtime, and lots of people are working construction and things and that break their bodies in order to get money. So we have this emotional connection to it, which we're going to talk about fear being that emotional connection and kind of that fear of loss. We'll talk about it in tomorrow's call. But that emotional connection to us makes it hard for us to let it do what it's supposed to do, right? We have this like emotional connection where we hold on to it, cling to it, right? We don't want to spend it. Everybody talks about saving money, blah, 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 and all these things. Like, yes, having some savings is important, but using those savings is much, much, much more important because eventually you want to get to a place where you make enough money, and what the money you make off that money replaces those bills, and you don't need savings or any of those things, right? So what's super, super important is being able to kind of remove that emotional attachment to money, because money's greatest power, and you guys can write this down, this is a quote from me, is money's greatest power is to make more money from it. That's literally what it was created for, right? But money was, we had money was made to exchange, right? It used to be the exchange of goods, right? So, we can talk about the power of money, where money comes from, right? And we all know, right? We all trade in currencies. Now let's talk about currencies, right? Like the foreign exchange market, it has now changed to money being exchanged hands, but the exchange market was one of the original ways to live and exchange, right? We used to exchange goods, right? It started a long time ago where you had a goat and you had a cow and you made milk and cheese. You go and exchange it with your neighbor for bread or something, eggs or something, right? You had this exchange market. Eventually that market grew where you knew you could make money or you could take care of your family. And eventually that came to a place where you exchange goods for currency, right? Or for money or gold or silver or whatever that was. And eventually that turned into money for money. And that's where you get, the foreign exchange market. And we really want to focus on that word, currency, right? We're literally called currencies. Now, if anybody knows, the definition of currency, it's not to sit still, right? It's the currency. Money is a currency, right? What it's supposed to do is continue to move from place to place to place to place. Electricity is a currency, right? It has a current, right? And the same what electricity does is it moves from place to place to place to place for other people can use it, right? You plug in, you take your part of the currency, you let somebody, it keeps moving around, right? Like that's the same process and the same understanding we have to have with money. Is that money's greatest job, and it's literally defined as a currency, is to move from place to place to place and pick up more of it, right? We are the currency, fiat currencies specifically, right? We have digital currencies as well, but its job is to move from hand to hand to hand to hand and create more of it. That's what a currency does, right? It creates current, right? So money is a currency. So money's greatest power is to be exchanged to make more money off it, right? We need to understand that currency, right, must move, right, to create more power, right? So one thing that's super important here when we talk about, the emotional connection to it, is that's usually why we hold on to it so hard. We're going to get into, like I said, we'll get into fear more tomorrow. But something that's super, super important is we need to truly understand and build our relationship with money. Like how many people, when they were younger, ever built a relationship with money? Most of the time, it wasn't talked about in front of their kids. Most of the time, you never had any idea what money was happening with your parents. If you are not exchanging this information or sharing this information, nobody can learn from it. And so that's what we do here. That's what my job is, to share as much information as I can so that you can get as much knowledge about money to use it to your advantage. Now, let's talk about what most people use money for. Right? Most people use money to pay their bills. Right? Or they, maybe they keep a little bit in savings just in case there's too many bills. Right? And this mindset that we have this mindset that most people are comfortable with is to just go and work and make enough money to live. Right? That's sort of the constraints, the money mindset constraints that we're trying to break here. That's what I'm trying to teach you. And I've never had any problems in life being able to make money. And if anybody here is always like, "Oh, what happens? What happens if trading doesn't work? What happens if I don't learn how to do this?" I promise you, every single person can go back to a job. You can always go back. There's always a job waiting. I promise. There's always a job waiting for somebody who has given up on wanting more or doing better when is ready to, get into that workforce and do it. Right? And so understanding that money's greatest power is to not buy things. Okay? It's not to buy things unless they're going to be resold for more, right? Because you want to increase the currency of your money, right? It's not to pay bills, right? That's not its priority. While we all use money to pay bills, I do it too. Money's greatest power is to make more money from it. And what we do when we get into this psychology and this mindset of how we make money, we get so afraid of not being able to pay our bills when really our bills need to be paid last, which is completely backwards from what everybody was taught. Everybody was taught to, pay your bills, put a little bit in savings, keep that budget tight so you can make it to your next payday. Right? And the majority of this world live in that mindset. It's very limited belief of what is possible with money. Now, what happens is if you flip that mindset and you start to reprioritize what you do with your money, right? Now, we talk about reprioritizing what we do with our money so that what we're doing, what happens first is we put our money where we can make more from it. Now, of course, if you're not trading at a higher level and you're not being consistent with your risk and you're blowing accounts every month, this becomes very hard. This is why when we talk about trading being a super long-term mindset, taking your 1 to 2%, your 3 to 5, maybe your 10 one month, maybe you only got one, that long-term mindset, because what happens is when you start to actually be patient and allow yourself to make money from your money, you will build trust with your trading system because you can trust yourself now. Most people come into this trading space and are trying to make money so fast that they put themselves into positions that they can't trust themselves. Because, oh, well, I did 30%, but then I blew my account next week. So you put yourself in this position where you truly can't trust yourself because you can't follow rules. And so what happens is when you start to turn that. So the first thing is you have to get locked in on making money from your money. And the richest people in the world do that first. The most wealthy people in the world do that first. That's the priority to them. Because what happens is you start to get pieces of time back. Right? Instead of putting all your money to your bills and then putting a couple $100 in savings and maybe putting $30 into a trading account or something, you flip that. Right? You're like, I have to put $200 in my trading account. I have to do that. Then I'll go pay my bills. Then if I don't have anything for savings, okay. Right? Maybe I put a smaller amount. Maybe I put 30 into my savings instead. Because what happens is, and I know this because I have lived it, is that when you get patient and you allow your money to make money from it, right? You start to put money in places where you can make, even if it's just a few percent, where you can make money from it. Right? A couple years down the road, say you start at $100. You're only making 3% a week, right? You're making $10 a month. That doesn't seem like much, right? But this is where compound interest, only thing that compound interest needs in order for your money to grow is time. It doesn't actually need a high percentage. It doesn't need anything crazy. Doesn't need you to do 100% weeks or 100% months or even 100% years. It just needs time at 2 to 5 to 3% in those areas. It just needs time. And once you can get patient and allow it to have time, then you start to get the results. And what happens is if you did that, if you flipped how most people look at money, if you flipped it and did that first, and you're doing $100 a month, the first month you're going to make, say you're making 3% a week, right? You made $12. That seems like nothing. And that's the problem, is that people get into those situations and they're like, oh man, $14 to $12, what am I doing? Right? But the problem is they're losing sight of the compounding. So the next month, you get to start the month at $112. right? 3% of that is now $15, right? You're getting a little bit extra. And what happens is you start to compound, and maybe that's slowly. Here's the thing: you put $100 in there, so not only did you compound your money, you did $12, but this month you put another 100 in. So now instead of $112, you're at $212. Now you get $20. Now you're at 230, and you add another 100. And so when you start to understand that even at a slow progress, money's greatest power is to make more money from it. And when you have that, it slowly grows. And then eventually, what happens is that money that you're making money from starts to pay the bills or starts to even pay a portion of them, right? So you're like, oh, well, maybe I made $80 this month. Either I can leave that in there or I can use it to pay some of my bills. Either way, you're going to be able to start to put more in there. And everything starts to compound. Right? The interest starts to compound. The money you put in there starts to compound. And at 10 G's, doing 3 to 5% a month, that could be somebody's car payment. That's where life starts to change. The problem is because we're so attached to our money that we're so used and we're so conditioned. Right? This is something that we're going to go over a lot in this trading psychology bootcamp is the conditioning we have to have limiting beliefs. The conditioning to keep us thinking we can't have more. The condition to keep us thinking that, hey, working this 9 to 5 is the best way for me to live. And for some people, that may be the case. But for people on this call, that is not the case. Our best way to be living is to be teaching ourselves our actual relationship with money. Right? Because we have to build a relationship with this. It's like anything else in life. If you're not aware of what's happening when you talk about your money, if you're not aware of the fear of it, you dread payday because you got to pay all your bills and you're broke again, you hate that feeling, then you have to do something different. Most people will wait around to be like, oh, in a year or so, I'll get a raise. That's okay. But that's not building your relationship with money. Once you can build a relationship with it, I can put some here, I can put some there, I can put some here. Once you know that you can do all those things, right, your money will start to build. Your relationship starts to get better. You start to have less emotional attachment to it because you're like, oh, I did 3 to 5% over here. Good. I did a little bit over here. I got paid over there. You start to add to your income. And then that compound interest starts to be exponential, right? So when you are building your relationship with money, first, you have to understand what it is. Money is not something that you're supposed to fill up your bank account with, make 0.5% a year in your savings account. That's the tiny little reward they give you to keep you putting money into your savings account. Okay? That's not what money's greatest power is. Now, do I want you to live beyond your means and be struggling every month because you're paying your bills last and your phone's getting no, but I want you to just switch that relationship. That what my relationship with money is to use it to make more. That is exactly what I need to use money for. I need to understand that money is not meant to sit in my bank account. Money is not meant to just pay my bills. That is its weakest usage. Can it be used for that? Of course. Does society and governments and everybody else want you to do that? Of course. Now, why would they want you to live that life? Why psychologically would they want you to be conditioned to just be okay making $20 an hour, 40 to 50 hours a week? Why? Multiple reasons. It keeps you in their system. Inside that system, you're a taxpayer, right? You pay high amounts of taxes, right? You are reliant on going to that job and making money to pay your bills. You are just over broke. I live in Canada, and the statistics are that over 80% of the people that live in my country are $1,000 mistake away from being broke. And that's not even a car. Your car breaks down and it costs you $1,000. That's when you're reaching out and asking to borrow money, right? So something that's super, super important is you must build your relationship with it. You can't be afraid of it. You can't be greedy with it. You can't hoard it. You can't do any of those things. That is not going to serve you when you want to build wealth. And what we're going to teach you here is, of course, trading can come in and people can make huge percentages and all those things. That people are telling you they're making 50% of a month, that is what people use to try and market you into a system that has no responsibility of outcome. And so one thing that's super important here, when you trade with me, I am responsible for you to win. That's the deal. And so one thing that's super important when you're here in trading and you're here in learning the psychology of money is my job is to teach you to make more money from your money. And in order to do that, you have to build a better relationship with it. And you can take that however you want. You can take it weirdly, like, oh, I got to take care of my money or any of those things. But what you really, truly need to do is you need to build that relationship with what you do with your money. It will change how you feel about it. Most of the times, people are terrified to do anything with their money. What if I lose? What if this happens? What if that happens? What if this isn't true? I don't know. All that stuff, right? All that stuff lives in how you have the relationship you have with your money. It's all inside there, right? How you control it, what you do with it, all those things. When I really truly started to learn the power of money, all I started to do was put it in other places to make me money. Like trading is the number one way that I make to earn income, but I also have cryptocurrencies. I also have, I'm also invested in real estate. These are all things I just kept repurposing my profit. It's a term that I'm going to teach you guys and we're going to talk about in our last call. It's how we repurpose our profit. Every time we make some money, we find another way to make money from it. That is the currency of money. Once we make some money, we find another way to make more of it. We find another way to make more of it. We find another way to make more of it. And we just repeat that cycle over and over again. And eventually, that cycle is going to become enough that we don't have to do anything else. That is repurposing our profit. And how that comes is by using money in its greatest power, by making more money from it. That's your number one job. You want to become wealthy, or not even wealthy. You just want to live a different life when it comes to money. You need to find ways to make money from your money. Not only is that going to give you a different life when it comes to your income, it's also going to give you a different life when it comes to your time. Because the one thing that's the most important thing here is that when you start to teach your money and start to use your money to make more money from it, you don't have to give up your time to do that. And the one commodity that you can't ever get back in this world is your time. And once you give time to something, it can't be returned. So what you need to do is you need to take what the time you have, take a small piece of it, say for this next year, this next 2 years, I'm locked in. All I'm going to do is trade, make my money, buy cryptocurrency, reinvest, keep doing that for the next 2 years. And I promise you, after 12 months, your financial situation will be much different. It will be 100% in a different space because you're going to learn how to treat your money properly and what you should be doing with it. Whether it's small $50 investments here, 100, it all will start to add up. But you must, this is going to be the most important thing we're going to learn through this trading psychology, is you need to give it time. All things are sorted in time. Everything. Compound interest, all it needs is time. Make more money, all you need is time. So what we're going to be focusing on here as we go through this psychology is how we put money in the best place to, over time, make more money from it. Okay? That's what we're going to be teaching you here over the next 4 days. We're also going to go directly into some trading psychology and how fear and greed and those things play into how you trade and how you can edit them and how you can work on those mindsets. We're going to give you guys a couple of routines as we go through the trading psychology, a couple of structural things you can do each day to work on those, right? So the first thing is you need to sit down with your money and be like, how can I make more money from my money? If you don't have enough money, we need to figure out how we can make some. Or you just need to switch your budgeting, right? Instead of 80% goes to bills, you're like, okay, I'm going to put 60% to bills. Maybe I'll let that fall a little bit. Maybe I can be a little tighter here and I'll put 20%, 30% into the place where I'm going to make more money from it. And that trading can be that 30%. It can take that whole section up. And that's what we're teaching you here. The first thing we're going to teach you is how to make more money from your money. to use money to its greatest power, to use that currency to pick up more money along the way. And when you do start to learn that, you will learn how to get your time back. Okay, so that is boot camp, trading psychology boot camp, day number 1. Okay, you're going to have 4 more days like this. I hope everybody's taking notes and rocking and rolling because we will have lots to talk about. So I want you guys, and we're going to be giving you guys things to do as we move along through the next calls. Okay, so everybody have a wonderful, wonderful day. We'll see you the same time tomorrow to talk about fear of trading. Everybody have a wonderful day. We'll see you tomorrow.
Awesome. That was solid. Right. How was tonight's session, guys? I'm super, super happy with tonight's session. Yeah, definitely. And it's definitely good to hear all of that. And, it actually made me think, right, I need to get in contact with Jay. I need to find out what cryptocurrencies he's bought into. I want to know, right? I'm gonna start asking everyone, like, to tell me the crypto. Yeah, of course, of course. Definitely 100%. I have got a list of a few of them as well. So I'll be sharing them with you guys. But I will ask Jay. I will reach out and ask him. But yeah, no, this is how we're going to be doing our sessions. So next session, again, will be day 2 on the advanced kill shot and then psychology of money again. All right. So hope you guys have had a good day. Hope you guys have had a good trading day. And I will see you guys on the next session. We can do another one tomorrow, no problem, in the evening. And yeah, have a beautiful, blessed evening. And I will see you guys. I'll see you guys soon. Don't forget to be on the call on Sunday. We've got a little announcement as well. Well, I won't say little, but got an announcement. Something else that is gonna give you something extra to put some extra money in your pocket. All right. It's within the community as well. So it's all good. And yeah, guys, I will see you all tomorrow. All right. Have a good night.